Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, as usual, we're starting with Asian investors. They made a stamp for exit on Monday with stock markets crashing to multi-year lows as fears surrounding the health of China's economy multiplied. As of course, we're also looking at China's benchmark Shanghai Composite Index. It fell 8% to a 5-month low late on Monday after a pickup in the speed of decline took the bourses down to an intraday low of 3191.8 points. The hefty plunge came even as authorities allowed pension funds managed by local governments to invest in the stock market for the first time, which of course could potentially channel hundreds of billions of yuan into the country's struggling equity market. Also looking in Hong Kong, the Hang Seng Index followed its mainland peers lower after which made down nearly 5%, with heavyweights such as HSBC and China Mobile plunging more than 4 and 6% to the downside respectively. Moving to Japan, over there the Nikkei 225 index skids 4.6%, finishing at its lowest closing levels since February 23, as a double whammy of China-related fears and of course revenued yen brought the bourses down by its biggest one-day drop in more than 2 years. The yen hit 1.5-month high against the dollar on Monday as of course investors dumped risk assets and of course flocked to currencies often seen as safe havens on fears about a slowing in the Chinese economy. The dollar slid as far as 120 yen, down more than a full yen from 121.96 late in New York on Friday, reaching a low last seen on July 9. Australia's S&P 200 index ended at its worst close since August 2013 on Monday after witnessing its steepest percentage drop since May 2012. The Australian dollar, of course, tanked to 6-year lows, and many emerging market currencies plunged to worries about foreign capital outflows after China shares dumped more than 8%. We're also looking at the Aussie, which fell to a 6-year low of 0.7202 versus the US dollar. Europe index futures indicated throughout that pushed equities into a bear market with only which worsened. Contracts on the Euro Stoxx 50 index tumbled 3.7% this morning. The Stoxx Europe 600, however, had its worst week in about 4 years, closing 13% lower than the record which reached in April. 13 out of 18 Western European markets have entered or extended corrections, a slide of 10% or more from a high. Germany's DAX index had plummeted 18% from its peak, and also we're looking at the euro that jumped to as high as 1.1499, its highest level since February. It last stood at 1.1460, up 0.6% on the day. Also, we're looking at the commodity sector over there. Gold held firm, hovered near its highest levels in almost 7 weeks on Monday, as of course worries over slowing Chinese economy pushed investors away from risky assets and into those that deemed as safe haven. Gold was off 0.3% at 1156.80 an ounce in late Asian session after touching a high of 1165.11 in early deals. Gold rose to as much as 1168.40 on Friday, its highest since July 7. It gained more than 4% last week, the most since mid-January. Of course, we'll also be looking at the energy sector. Crude futures is over there hit fresh and a half lows on Monday to drop below the latest support of $40 a barrel each, as of course investors are taken to China's economy and its slowdown. US October crude futures fell $1 to 39.45 after hitting low of $39 a barrel, lowest since February 2009. And of course, the previous session it settled 87 cents lower at $40.45 a barrel. That's all for today. Thank you very much for joining us. See you next time. Bye-bye.